So, what if I told you that this entire AI revolution, this incredible moment in technology, is being powered by a $1 trillion feedback loop? It's kind of a wild idea, right? Today, we're going deep into the money behind AI. And trust me, it's a world of absolutely massive investments and some really complex deals that are making people ask some very, very serious questions.
Let's just start with this number, $1 trillion. Now, that's not just one company's price tag. No, that number represents this huge interconnected web of money flowing between the biggest players in the AI game. We're talking the AI model makers, the giant cloud companies, and the chip designers. They're all in this together. And a number that big brings us right to the core question, doesn't it? Is all this growth, all this hype, built on real customers who actually need this stuff? Or is the whole industry just a giant financial merry-go-round with a few big companies just passing the same money back and forth to each other? To really get to the bottom of this, we have to understand the engine that's making this whole thing go. It's a concept called circular financing. And honestly, it's shaping the entire AI industry right now. Okay, so what is it? It's basically a closed loop. Think about it like this. An investor, let's say a big tech company, gives a startup a ton of money. Then that startup turns right around and uses that same money to buy products from the investor. The investment essentially makes a round trip. It comes right back to where it started, but now it gets booked as brand new revenue.
And here is the most famous, most perfect example of this in action, the Microsoft and OpenAI deal. Step 1, Microsoft puts a staggering $13 billion into OpenAI. Step 2, OpenAI desperately needs computing power to train its models, so it takes a huge chunk of that cash and spends it on cloud services from, yep, you guessed it, Microsoft's own Azure platform. Now, you can look at this in two totally different ways. On the one hand, it's an incredible engine for innovation. It gives startups the fuel they need to build these amazing new models. But on the other hand, it creates a really fragile system. The risk isn't just that it makes demand look bigger than it is, it's that everyone becomes so dependent on each other that if one of these giants stumbles, it could set off a domino effect across the whole industry. You know, this combination of insane valuations, these intertwined deals, and all these questions about where the demand is really coming from, well, it's ringing some major alarm bells for anyone who was around for the dot-com bubble in the late 90s.
This quote from Paul Graham just captures that old dynamic perfectly. VCs gave money to startups. The startups used it to buy ads on Yahoo, which made Yahoo's revenue look amazing, which then convinced investors to pour even more money into more startups to buy more ads. It was a cycle built on pure hype, not necessarily on real paying customers.
But here is the big twist. The fundamentals today look completely different. Just look at the funding source here. The dot-com boom, that was fueled by companies with tons of debt and no profits. Today's AI boom, it's being bankrolled by tech giants who are swimming in cash. And check out the infrastructure use. This is wild. Back then, only 7% of all that new fiber optic cable was even being used. Today, data center vacancy is at a record low. The demand for the basic plumbing of AI seems to be absolutely real.
Okay, so let's see how all this feeds into the huge debate that's happening right now in boardrooms and on Wall Street. Is this whole thing a bubble waiting to pop, or is it a solid foundation for the future?
And there is zero doubt about where the smart money is placing its bets. In the last year, 1 out of every $2 invested by venture capitalists around the world went into an AI company. That's unbelievable. To say that belief in AI is strong is a massive understatement. This is a full-blown gold rush.
So this really sets the stage for the two competing views. The skeptics, they see a house of cards. They see revenue that's being propped up by these circular deals and valuations that just feel way out of touch with reality. But the believers, they point to a solid foundation. They see profitable companies funding this, they see AI tech already making real money, and they see a genuine, desperate demand for computing power that just can't be met.
And this quote, I think it just gets right to the heart of the matter. Forget about whether this feels like the dot-com era. The real question is whether the underlying economics are the same. We have to ask the tough questions, Are these companies profitable without their investors' money? Is there real demand? Is all this new infrastructure actually being used? So as this incredible story keeps moving forward, what are the key signals that you should be watching? How can we, separate the real, world-changing stuff from all the speculative hype?
All right, if you want to be a smart observer here, these are the 4 things to keep an eye on. First, utilization rates. Simple question. Are those massive data centers actually full? Second, look for something called related party disclosures when companies report earnings. That'll tell you how much of their revenue is just coming from their own investors. Third, is enterprise adoption growing? Are normal businesses paying for this? And finally, the classic canary in the coal mine, a wave of IPOs. That's the sign that insiders might be rushing for the exits. The fact that we haven't really seen that yet, well, that's very telling.
So, where does that leave us? Look, the AI boom is moving at a crazy speed, and it's being fueled by this trillion-dollar loop. But as this tech starts to get woven into everything we do, the biggest question isn't just about whether it's a bubble or not. It's about who really profits in the end. Where does all of this money and all this power ultimately end up? That's the real story that we're all about to live through.